Hey everybody, Rob Maurer here, and today we are going to go through the major disclosures from Tesla's 10K annual report, the filing that follows earnings. Also got some updated data on Tesla vehicles in China, some news on Tesla in Mexico, and more. Quick look at the stock. Tesla today rebounding a bit, up nearly 4% to close at $173.22. The NASDAQ up 1 2/3%. So I think Tesla kind of just following the market around a little bit with a higher beta over the last couple of days. All right, so let's jump into Tesla's 10K filing, which they published today. This follows the earnings report. We tend to get a little bit more information about their annual results in this filing. It's more detailed, and part of this filing is to disclose risks. Those risks are important to understand, but the media does like to gobble those up and present them, oftentimes lacking some context. So one of the ones that got attention today, Tesla disclosed in the 10K, which received a lot of media attention, covered here by CNET and others, a line that says, quote, "The company has received requests from the DOJ for documents related to Tesla's autopilot and FSD features. To our knowledge, no government agency in any ongoing investigation has concluded that any wrongdoing has occurred," end quote. DOJ here, of course, refers to the US Department of Justice. So a lot of times these get picked up and they're simply disclosures that were made in previous quarters. So I did want to look back and see if that was in the 10Q from Q3. And in this case, this is actually a new disclosure from Tesla. So in a difference checker here, you can see the third quarter 10Q on the left and the fourth quarter 10K on the right, which shows that the disclosure that I just read is new in this 10K. We'll talk more about that in a second, but also notice that some items from the third quarter 10Q have been removed. Tesla had said that previously the DOJ had asked Tesla to provide some information relating to taking Tesla private and Model 3 production rates. They said that Tesla has not received any further requests on that, and that had been since May of 2019. That whole section is now removed, so I guess I would interpret that as Tesla not expecting anything further to come of that previous information request. Getting back to the request for information around autopilot and FSD, I think that serves as a good reminder that oftentimes a request is just a request, and it doesn't necessarily mean that anything bad is going to come from that. But again, it is still an important risk to keep in mind. Now, even though this wasn't in the third quarter 10Q, this isn't necessarily new news. We talked about this actually back in October. At the time, Reuters had reported that sources at the Department of Justice had informed them that the Department of Justice was looking into Tesla regarding autopilot and FSD. So this has already been covered heavily in the media, but now we gotta go through that cycle again with this official disclosure from Tesla. All right, next in the 10K, one of the things I always like to look at is the breakdown of revenue by region. So here we can see of Tesla's $81.5 billion of revenue for the year, how that's broken out between the US, China, and other. Tesla had huge growth this year in the United States, a nice 69% increase year over year, putting US revenue at almost exactly 50% of the total, an increase from 45% of the total last year. I think the outsized US growth really shows how constrained Tesla had been on deliveries in the United States entering the year. A major factor driving that was Tesla exporting vehicles from Fremont in 2021. In 2022, they shift that to be predominantly from Shanghai, opening up more of that supply in the United States and allowing Tesla to work through that backlog throughout the year. Outside of the United States, Tesla saw slower but still healthy revenue growth, 31% increase year over year in China and 42% increase year over year in other areas. We've talked a lot about Q4 for Tesla in China, but I do want to focus in there for a minute because we now have the revenue figure for the fourth quarter. We've talked previously about how Tesla's fourth quarter retail sales or domestic sales in China were a quarterly record just barely, but I mentioned at the time with the price cuts that we saw, Tesla's revenue likely declined in the quarter. Turns out that is the case. From the 10K, we can calculate that Tesla's fourth quarter revenue in China was about $4.6 billion. That's down 11% quarter over quarter from the $5.1 billion in revenue in Q3. Not only is it down quarter over quarter, it's actually down year over year as well. Tesla's revenue in Q4 last year in China was about $4.8 billion, so this year's Q4 down 5% year over year. Unlike revenue, Tesla doesn't break out gross profit by region, but my guess would be that for both of these comparisons, gross profit would also be down. So I think I've been fairly consistent in my opinion that this has been a major influencer of the stock price performance that we've seen in the fourth quarter. You've got expectations of strong growth shifting to actual results of a decline in one of Tesla's major regions, and that brings fear that that could happen in other areas as well. Now, obviously, there are things to consider when we look at this one quarter regarding COVID, just the auto market declines in general. So we'll see after more significant price cuts how this changes for Tesla going forward. Next, I always like to see what Tesla has to say on Tesla Energy. The 10Qs are actually a little bit more informative in these cases because Tesla in the 10Ks is just talking about the annual results. So the granularity of the commentary around the quarterly results can be a little bit more informative around energy, but For the year, Tesla says that energy generation and storage saw revenue increase by 40%, primarily due to an increase in energy storage deployments of Megapack, Powerwall, and a higher average selling price of Megapack. The higher average selling price bit is interesting and, among many other things for Megapack, speaks to the high demand the product has. On energy margins, Tesla says that the increase from negative 4.6% last year to 7.4% this year was driven by growth in revenue compared to costs. Pretty intuitive on that part, but they say additionally there was a higher proportion of energy storage sales, which operated at a higher gross margin within the segment. So not too surprising at this point, but Tesla's saying energy storage more profitable than solar, which is a positive as we look towards next year, since energy storage likely growing much faster. It's also a positive in historical context. You may remember that I've noted in many 10Qs, Tesla has commented that Megapack has had a negative impact on Tesla's profitability. So as we have been suspecting with the increase in margins the last couple of quarters, seems like Tesla has passed that phase. So 2023 should be a great year for Tesla Energy, but remember, let's just keep expectations in check a little bit because Tesla is still going to be ramping throughout the year and ramping has costs. All right, a few other quick things in the 10K. On Bitcoin, Tesla did say that for the year they recorded a $204 million impairment. That's $34 million more than Tesla had indicated last quarter. So as we had suspected, the $34 million cost in restructuring another, that is Bitcoin impairment, and that is right in line with my forecast. On CEO compensation, Elon has now hit all tranches of his 2018 compensation plan, with the final milestone of $75 billion in trailing 12-month revenue being achieved this quarter, which, as we had also talked about, means that Tesla did in fact recognize $4 million of CEO compensation expense in Q4. That plan is now fully recognized. It will no longer hit Tesla's income statement going forward, and we shouldn't hear too much more about it for the next few years until Elon can actually start selling those shares if he wants. On deferred revenue, we know Tesla recognized $324 million from FSD deferred revenue in the fourth quarter. They say in the 10K, over the next 12 months, they expect to recognize $639 million of deferred revenue. So that's a good reminder of why we want to understand the business with that backed out. That would only be a little over $150 million a quarter, which would be less than half of what Tesla recognized in the fourth quarter, and that's assuming it's consistent and actually recognized as Tesla expects. I would expect that to be lumpy if it is recognized, and also historically, Tesla's expectation here has not tracked very closely with the reality of recognition. Next, there were some questions following the earnings report on Tesla's disclosure of nearly $4.5 billion of purchases of investments. We get some more detail on that from Tesla's 10K. It looks like they have put this investment nearly entirely into certificates of deposit, which Tesla considers to be a part of their cash equivalents, and short-term investments balance, which sits at just over $22 billion. To be included in that section, Tesla says that each investment has a maturity of 3 months or less. So these are very short-term CDs. Tesla probably earning 4.5% or so interest on those CDs. Last couple of things from the 10K then. We now have updated capital expenditure guidance. Tesla says for 2023, they expect to spend between $6 to $8 billion for CapEx, then $7 to $9 billion for 2024 and 2025. That is the first time we get guidance for 2025. In Q3, Tesla had said that they expect $6 to $8 billion for 2023 and 2024. So a little bit higher range for 2024 now, the first guidance for 2025, and then the same guidance for this year. If Tesla is able to achieve their targets and still spend in those CapEx ranges, that will continue, as we have seen historically, to speak to Tesla's incredible capital efficiency. Finally, Tesla notes that although receiving some criticism for layoffs throughout the year, Tesla's headcount increased by 29,000 people year over year to 127,855 employees, up about 29%. All right, let's move on from the 10K now. We've got updated China insured vehicle numbers. This is the first report on this for a couple of weeks because, of course, we had Chinese New Year in the interim. So over the last 2 weeks, you've got about 11,000 vehicles from Tesla registered for insurance in China, but it really doesn't mean much given the impact of the Chinese New Year in that period of time. If we look at the graph for BYD, we can see pretty much the exact same slope on their insured vehicle numbers the last 2 weeks. Even with that impact, this should put Tesla's sales in China above 25,000 for the month, which would be a record first month of the quarter, about 35% above the record from last January. As we learned last quarter though, that doesn't necessarily mean a whole lot on how the entire quarter is going to come in. So relatively unimportant insured vehicle number update here. We'll see how things evolve over the next few weeks. All right, next we've got an update on the rumors on Tesla in Mexico. Actually, kind of a new rumor here. A Mexican presidential spokesman told Reuters that Tesla is considering setting up an assembly plant near a Mexico City airport. which he says would apparently serve as an export hub for Tesla. Says, quote, Tesla is looking at investing in that area to take advantage of the IAFA, end quote, which is the airport there, noting that the site could serve as a base for the firm to export by air. Quote, Tesla will invest there in an assembly plant to export directly by air, end quote. Reuters also notes that they were told separately by a Mexican official that Tesla had been shown the site, but had given no indication of its plans. So weird comments there by the spokesman. I don't think Tesla would have any major plans to export vehicles by air. Maybe they would want to be by an airport for other purposes. So I think that calls into doubt a little bit of the credibility of this report, but maybe sounds like Tesla's looking at that area. This is very far from Nuevo Leon, where we have had previous rumors. Nuevo Leon, much closer to the Texas border. It's about an 11-hour drive from the area here in Mexico City. Speaking of Texas, more and more heavy machinery making its way into the Gigafactory. We got an update from Joe Tagmeyer, who has spotted some huge presses making their way into the battery cathode plant from a company called SACMI. And from my reading so far, it doesn't seem like anyone has a great idea of what these presses are going to be used for. It sounds like they can be used for some sort of ceramic plating, but it's not clear if that's the intended use case here for Tesla, or if it is, what exactly that would be used for in the battery production process. So if you have any theories on that, feel free to share in the comments. Then a couple other things here. We've got an interesting article from Not a Tesla App on a video that was produced by a person who was doing some work on a Tesla vehicle, and as a part of that had removed some of the ultrasonic sensors. But when moving the vehicle in that state, found that the vehicle was still giving some indicator of the parking sensors being on. So this would be coming from the cameras, like Tesla eventually intends to do, of course, with the removal of those sensors from newer vehicles. But that is still not a production released feature. We've seen some signs of that showing up in the firmware. So likely Tesla continuing to test the results of the camera readings versus the ultrasonic sensors. But cool to kind of see that actually in process, and hopefully that feature replication not too far off. Next, a quick update on the discount that we had talked about yesterday for trade-in vehicles for a Model S or Model X. I had a listener reach out today that contacted Tesla about that offer, trying to trade in a Model 3 or a Model X, and they were told that that is not a current offer. So as we had talked about, this only applies for Model S and Model X, but it looks like even on the trade-in side, it might only apply for certain vehicles, perhaps only trading in a Model S or Model X. So if you have any more information on that, feel free to share that in the comments as well. Finally then, GM did report earnings today. I haven't had as much time to go through that, with Tesla's 10Q also being published today, so we'll probably talk more about that tomorrow. And then of course we'll have the FOMC meeting tomorrow as well, so keep an eye on that a couple hours before market close. Alright, that is where we'll wrap it up for today then. As always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast, and we'll see you tomorrow for the Wednesday, February 1st episode of Tesla Daily. Thank you.